How are the ultra-wealthy responding to the recent market volatility? AlTi Tiedemann Global is a wealth manager with $77 billion in assets under management. The firm is out with its annual social progress index and its outlook on where private capital can drive impacts. Joining us to discuss all of this, we've got Michael Tiedemann, AlTi Tiedemann Global CEO. Michael, great to have you on. We're going to talk about the social progress index, but I would be remiss to not speak with you about all the market action that we have seen this week. Where do you think the market is heading? Is this the beginning of a bear market, or are we about to see just more movement to the upside like we've gotten used to over the last 2 years?
You're asking me to make a market prediction that most people would love the answer to. First of all, thank you for having me. Second of all, I think it should be no surprise that there's increased volatility in this year, and there are some decisions being made and discussed politically that are obviously creating a lot of that volatility. But it's the back of 2 years of really outsized returns and a narrowing of really what is driving the market. So volatility should be expected. In terms of how our clients are responding, we have diversified portfolios. Our client portfolios tend to have about a 0.5 beta to the market. So this is never a comfortable time. Certainly a lot of people asking questions and making sure, but when you own high quality assets, high quality risk assets, this is exactly the type of environment and you're reminded as to why you own those.
And how have you been advising clients through this moment? Are there any assets you've been advising people to get in or out of right now to kind of hedge some of the volatility?
We rebalance portfolios. So as you go through, the last few years, there is a rebalancing that naturally occurs, and there's been substantial repricing in high quality fixed income as an asset class. So we have gone from 3 years ago being dramatically underweight that asset class to now more in balance than we have been certainly for the prior 10 years. And then we have a lot of diversifying assets and a lot of assets in private markets. So strategies like private credit and whatnot that are not impervious to market downturns and challenges. And we think there'll be cycles in the future that will be more challenging in spaces like private credit. But however, these are great diversifying assets. And obviously, other assets like gold can be very helpful at points like this.
Yeah, and Michael, our audience of retail investors have been filing in a lot of questions to us about private credit, about the potential of private credit ETF investing in particular. How do you think the investors who maybe don't have the investor hygiene of the folks that you work with, earlier stage investors, how should they be thinking about the opportunity associated with private credit?
If you've gone through any credit cycle as an investor in history, one of the most critical elements is asset liability pairing or not having a mismatch of asset liability. So this is the structures in which you're investing and the quality of the firms in which you're investing are critically important. There will be economic cycles. That is the only thing that is guaranteed. But when you have a mismatch or a structure that has too much liquidity afforded to investors and does not align with the duration of the underlying loans that are being made into the companies, and if it's with the wrong firm, you're taking risks that you likely won't understand until it's too late. So we would urge caution about a structure that offers too much liquidity. And also I would really orient towards the highest quality managers in the space.
And let's talk about your social progress index here. I know that you are calling on private capital to really prioritize social progress through the likes of DEI initiatives, gender equality, for example. How are you pitching that to people given the backlash that we've seen to DEI initiatives in particular from this administration?
Yeah, this is not a DE&I initiative. Social Progress Index has 174,000 data points. So what this really is an incredible data set. And when you start reviewing data and when large families that are looking to make investments into areas where they believe they can drive change, that can be regenerative agriculture, it could be climate solutions that are scaling and carbon sequestration, gender equity investments. These are all things that the most important data, aside from the returns that are driven, is the non-financial data. And that is where historically there was a lot of great intent in people making investments within the impact space, but there wasn't really the capture of that data. We now have entered a phase where there is data coming back to families. They can actually see, first of all, they're getting a return on their investments, and that is competitive with capital markets. And then they're able to generate return and recycle into those spaces if they're actually seeing the impact that they sought in the first place. So that, just to be very clear, this is not a DE&I initiative, and this data set is as robust as any. It points out a lot of the issues that societies across the world have been facing: housing, cost of food, water quality. These are all healthcare costs, education costs. These are all systemic issues there are solutions and investable solutions that are available, and that's what our clients are really seeking.
And talk to me too about what the data show about voter dissatisfaction. What does that look like?
It's linked. When you have inflation or stagnation in wealth, or declining healthcare solutions, or increasing healthcare costs in societies. I share a board of a charity here in New York City, and we serve 35,000 families. And you see one of the primary reasons why families are in line being served is because they had a family member of a health-related issue, and it really pushed them under the poverty line. So there are societal issues like that ultimately are not easy to solve for politicians and have not been approached historically really in the right way. So that eventually does lead to voter dissatisfaction.
Yeah. All right, Michael, really appreciate you joining us and breaking that down. Thank you so much. Michael Tiedemann, CEO of AlTi Tiedemann Global. Thank you.
Thank you.